Hi, everyone. Thank you for joining the first East Africa Blockchain virtual event. This event will be held throughout the month of May under a variety of different themes. So Bitcoin was created to form a decentralized and digitized alternative to traditional money. Though it's been in the market for quite some time, it has started its own version of a sophisticated structure in the traditional financial ecosystem. And decentralized finance is going to become a major factor in the global economy. This week's theme will be digital currency, crypto, and digital transformation. We will be bringing in influential speakers and educators on different topics throughout the week. I'm your host, Rachel Law, and we will be kicking off our first session with Naomi Oba, marketing manager from the Bitcoin Exchange, and she will cover the topic of decentralized finance and trading. Following Naomi, we will be joining Ravi Srinvans from Blockchain for Social Impact, and he will shed some light on digital currency and its contribution in financial inclusion. We will be saving questions for our speakers until the end of the session. Thank you for joining us, and we hope you enjoy the session. Take it away, Naomi.
All right. So I prepared a little presentation. Let's see how this works. So I hope you can all now see my screen. All right. Okay. So yeah, I'm here to talk a bit about trading, crypto, and DeFi. And I hope I can give you a first good idea about the topic. And yeah, what I have prepared today is, first of all, I would like to give a bit of an introduction into trading in general and give some idea of technical analysis, because that's a tool that most traders will actually use to make their decisions. And then I will be talking about DeFi and crypto. I do think there's a lot of other introduction to DeFi workshops as well, so I will not get too deep into it, but I will still highlight some opportunities that I see, especially also in African countries. And then we'll also list up some of the challenges that still exist and one should be aware of. And then last but not least, I will also get into a bit on how you could actually get started, be that trading or getting actually involved in the space itself. And yeah, first maybe about myself a bit. I, as Rachel already mentioned, currently working for the Bitcoin.com exchange. We are cryptocurrency exchange and have been around since, 2 years now. And I actually started working in the blockchain and crypto space in 2018. So it's now around 3 years and it's still very exciting every day. And in my free time, I also volunteer for a local charity that has nothing to do with crypto. And when it comes to trading, I'm actually more of a buy and hold kind of person. So I don't usually trade super actively, just on occasions I do. So maybe just a quote to kick off. You will often hear stories about, the TikTok kid that invested his $50 that he got from his mom and made 50,000 out of them. But you will rarely hear about people who actually lost a lot of money because they won't be very vocal about it. And I think it's important to be aware of that dissonance and disconnect, and to know that actually to be successful in trading, like in many other things on life, you need to be always seeking out information, and you need to be willing to continue learning and to learn from the mistakes you've done in the past. But first of all, what is trading to begin with? And to put it really easily, trading is just the buying and selling of different assets in the hope of making a profit. That's really the essence of trading, and that's what all the traders and banks and whatnot are trying to do. And trading happens, most of the times it happens on exchanges or on OTC desks. So OTC stands for over the counter, and I will explain that on the next slide as well. And it can also happen peer-to-peer, but that basically means that you directly buy and sell from each other, but it's a bit more rare in the space. And yeah, who is doing trading? That can be really anybody. First of all, of course, we have a lot of companies that are trading that might either be for their own purpose, or maybe they are even issuing, for example, shares and stocks to sell on the market. And then if we decided to trade as individuals, we would be retail traders. We can also start trading, and usually we will have to sign up to some platform to do that, and we'll then be able to trade whichever asset we decide to trade. Institutions, of course, are also trading. That is especially financial institutions, but I think what a lot of people forget is also that, for example, insurance companies have a lot of money and they usually invest that as well to make sure that they can meet insurance policies. And then there's also governments that are trading to ensure, for example, that the pension fund can keep up with the future demand. And yeah, to get into the exchanges versus OTC, just because that it will be helpful also to understand DeFi a bit, or what kind of venues you can trade on. Exchanges are basically just marketplaces where you can buy by placing your order into an order book, and this order is then matched with the order of another person that wants to sell an asset. So let's say you wanted to buy 10 Amazon shares at, I don't know what the price is at the moment, but maybe at $200. Then you simply put that into the exchange account you have, and then this will be matched with another person who is willing to sell them for that price and that amount. OTC desks are a bit different in that they are usually used for big trades. So when institutions decide to sell a big amount of something, then they are sometimes not willing to go through a public venue, and that is because they don't want to influence the price. And that is when they will go to an OTC desk. And the OTC desk, what they basically do is just broker between the two parties to ensure that both parties will receive, what they agreed upon. Because obviously, if you just do it without any third party involved, you might run the risk that the other party, once they receive the asset or the money, might just disappear. So OTC desks are there to ensure that even big trades can happen without influencing the market price. And another important differentiation to make, even though a lot of people will use the terms trading and investing interchangeably, there is a bit of a different notion behind both of them. Trading is really the idea of buying low and selling high. And it is more of a short-term activity. I would say if it is all under a year, that is your time horizon, then it's probably more trading than investing. And trading can also involve exploiting price differences across different platforms and across countries. So for example, we often see that with Bitcoin. We often hear about that Bitcoin, for example, when it is trading at, let's say, 50,000 in the US, it might be trading at 58,000 in Korea. And trading would mean that you buy the asset in the US to then sell in Korea to make some return with that. And most of the trading is actually based on something called technical analysis, which involves looking at the charts and figuring out if now is a good moment to buy or sell. Investing, on the other hand, is really based on the idea that time in the market is better than timing the market. So what traders often try to do is they try to time the market in terms of buying low and selling high. But investing really is the idea that the longer you spend in the market, and if you pick wisely, you will make money in the long run. So what investing really is you buy into something and then you hold onto it for a long time and hope that it grows. And it can also involve dividend payments. If you invest, for example, in a company share, they might be giving out dividends and you can earn some money additionally in the appreciation of the asset. And the investors, they often base their decision on what to buy on fundamental analysis. And that basically means you look at the company's balance sheet, you look at the industry the company is operating in and how it has been doing in the past to figure out if there is a lot of potential for future growth or not. But now let's get technical, because today we want to focus more on trading and DeFi and not so much on fundamental analysis. So as I already said in the beginning, technical analysis, it involves the use of price charts and various indicators to identify trading opportunities. And technical analysis is really based on the idea that, first of all, markets are efficient, but sometimes it takes time for them to find the right price. And when you can figure out if an asset is undervalued or overvalued, you can benefit from that. And it also assumes that history repeats itself. So traders have a lot of different chart patterns that they've identified over the past, and that have usually predicted that the price will move in a certain direction afterwards. And so they believe that if you can identify those patterns, you can make very good predictions about how the price will move in the future. And just to give an idea of how these things work. So one thing that traders really look at, and that is fairly easy for most people to understand, is the price trend. And that's really just looking at the chart and seeing how has the price been moving, how long has it been moving in a certain direction. And sometimes it helps to zoom out as well, because what happens if you just look at a very short time frame is that you might be missing the bigger trend. As you can see here, if you just looked at the last week, let's say, you would maybe assume that the price is going down. But over the long run, the Amazon share has certainly appreciated. And another very important indicator for traders is volume, meaning how much of an asset has been traded over time and on that day. And this one is especially important because it can indicate when the volume is very low, that there's a trend reversal going to happen, because the price that is very high but not supported by a lot of volume means that not a lot of people actually think this is the correct price. Another one which also helps to visualize simply the price trend is the so-called moving average. And it is simply an average price of a specified time frame. So in this example, as you can see here, it says MA10. So this is the average price over 10 days. And then it's just drawn into here with a line. And this is often used by traders simply to visualize the price trend over time, and can be adjusted. If you use any exchange platform or any trading platform or something like TradingView, this will be one of the default indicators you can find on all of them. And last but not least, there's also something called the relative strength index, which measures basically the speed and strength of price movements by comparing the current price with price performance in the past. And as a rule of thumb, if the RSI, relative strength index, is above 70, an asset is considered to be overbought, which means that it might potentially go down again in price. And if it is below 30, it's considered to be oversold. And this is just to give you an idea of how traders actually go about charts. So what will usually happen is that they use a lot of these different indicators, putting them all together to form one picture and to form their opinion on what they think the price is going to do in the future. Obviously, there's no guarantees, and it's a science for itself, but there's certainly a few rules of thumbs and a few very good indicators that you can use. And then to the main topic, let's say, of this whole summit, crypto and DeFi. And so maybe just to throw out a number, this is actually, I looked it up yesterday, so it might be different again today. So this is the market capitalization of all cryptocurrencies listed on CoinMarketCap at the moment. And CoinMarketCap is really an aggregator of all cryptocurrencies that are traded with enough volume. And yeah, so at the moment it is as 2,430,000,000,000, which is quite a lot, and also captures the tremendous growth this ecosystem has experienced over the last few years. But I think really what I would like to focus on today is more on DeFi, because decentralized finance is really an exciting topic and has been growing a lot in the last year, especially. So maybe just to recap what decentralized finance is, in case you are not so sure. So what decentralized finance basically tries to do is to build financial services on top of decentralized blockchain technology. So decentralized finance, I think the ultimate idea is to have a financial system on top of these blockchain technologies that are accessible to anybody and that mirror the existing financial system, but in a better way. So for example, as you might know, at the moment, the financial system isn't necessarily accessible to everybody, can be hard to access, and with decentralized finance, anybody who has an internet connection will be able to access the system. It is also a trustless system that is working on the assumption that code is law. So you won't necessarily deal with another human being when you are making trades in decentralized finance, but you will probably be interacting with a smart contract, which is based on code. So everything that will be happening in there is really encoded in the system. And what's more exciting is that decentralized finance is obviously creating a lot of new opportunities for people to get involved, but also for people to manage their finances in a better way, which I personally find very exciting. And yeah, just to give like a very high level overview of what kind of platforms we have in DeFi. So first of all, we have decentralized exchanges. They're very similar to centralized exchanges in the sense that what they do is they help you exchange one cryptocurrency for another cryptocurrency. But the big difference is that it's not like on centralized exchanges where your order is matched with somebody else's order. It is a pool of cryptocurrencies which you will be interacting with that automatically will swap your cryptocurrency to the one you want to have. So you don't really interact with another person, but just with a smart contract. Then what also is a really, fun topic are stablecoins. Because obviously it is not so feasible for all of us to be using a cryptocurrency that appreciates and depreciates on an hourly basis for storing our money. And also, for example, for merchants, if you sell something and you accept crypto for that, you don't necessarily want the crypto to be worth a lot less on the next day. And this is where stablecoins are trying to offer some stability in the DeFi ecosystem. And those are cryptocurrencies that are aiming to maintain a stable value. And most of the stable coins that are quite big are doing that by simply simply keeping money in their storage. So there's one really famous one, which is called Tether, and how they maintain their value is that they simply put $1 into their bank account for each $1 that they issue on the blockchain. But what's exciting in DeFi is that these stable coins, they do that without having to put any money in a bank account by providing loans, which brings us to the next one, which is lending platforms. And these platforms, as the name suggests, they simply bring together people that want to lend their crypto and people that want to borrow their crypto. And lastly, we also have a big market for synthetic assets. And it might sound like a fancy term, but it is nothing different than a derivative in traditional finance. So that means it derives its value from something underlying. So let's say, you wanted to buy, I don't know, maybe Tesla shares, but in the country where you're in, you can't do that because you can't sign up to the broker account, or you can't pass their verification, or you can't get the right currency to invest. So what synthetic assets allow you is to create a token that will mirror the performance of Tesla shares. And this way you could benefit from the performance of them and without having to actually buy them. So those are synthetic assets, and they can be created for a variety of assets. So there's basically no limit to what people could issue. Yeah. So one of the big opportunities that personally I see, especially in countries where, for example, inflation is high, maybe there's economic instability, so people are not sure how the economy is going to evolve over the future. And I think that is really nearly everywhere now that the pandemic keeps on ravaging through some countries. And also another big problem we see even in developed economies is obviously lack of trust. So lack of trust in the government, for one, that they can't guarantee your funds if you put them in a bank account, and maybe also lack of trust in financial institutions, which makes you maybe want to store your money in your own home, which isn't necessarily the safest way either. And this is really where stablecoins can provide a solution. And as I mentioned, stablecoins, they really keep their value. And even though there are very slight fluctuations in their value, even of those stablecoins, they're usually around like 0.01 difference or so day by day. But they are still a lot more stable than the currencies that are usually, than the currencies in countries with high inflation. And we've seen that, for example, play out recently in Argentina or Venezuela, where a lot of people started using cryptocurrencies just to have a bit of a safer asset. And they actually used partly Bitcoin, which is a lot more volatile, but still was more stable than their fiat currency that they had in the country. Another aspect of stablecoins that I think can provide a lot of opportunities is also that they are quite easily accessible. So yeah, as long as you have an internet connection, then you will be able to access your stablecoin. And also something that people will tend to forget is that often in countries where high inflation is happening, the government will put in capital control to avoid people storing a lot of dollars, which is usually the go-to currency if you want something stable and your own currency is not that. People will often use the US dollar because it is the world currency. And if you use stablecoins, you don't fall under these capital controls. And yeah, talking of control, it's also if you use a cryptocurrency, you are really in control of your funds. So it is not the bank that can suddenly withdraw your money. It is always you. As long as you have the private key, it is yours and you are fully in control and nobody else can touch it. And well, if you already have stable coins, you might as well make the most out of them and make them work for you. And this works the best way by putting them into lending protocols. So as you might be aware, most banks, even if you have your money in a bank account, they will rarely pay any interest that is meaningful or even keeping up with inflation. So that's why lending in DeFi is really exciting, because you can earn 6 to 20% on your stablecoin. And the way it works is that, let's say you're a lender, and let's say you have a stable coin and you know you don't want to touch it in the next few months and you would like it to earn some interest for you. So then you put your stable coin into a DeFi lending protocol. That can be Compound, that can be Maker, that can be any other DeFi lending protocol. Now, on the other side of this equation, we have a borrower. And in DeFi at the moment, that is usually traders who want to trade their, they want to take out a loan to make that trade. So what this borrower is going to do is he will request a loan from the protocol. So now, obviously, we are talking about cryptocurrencies. And the way it works, even if you take out a normal loan, you usually have to put up some form of collateral. Collateral is basically a sort of insurance policy for the other side that even if you don't pay back the loan, there's still something at least you can recover in funds. And because we are in the world of cryptocurrencies and the trader is going to deposit a cryptocurrency as collateral, he will have to deposit a lot more than he takes out in loan. So that means, let's say the trader wanted to access $1,000 worth of a stable coin. He would have to put up 2,000 equivalent, like cryptocurrency equivalent in value to $2,000 to be able to do that. So yeah, the borrower deposits this money and then he can take out the loan. Over the time he is using the loan, he will also have to pay interest. And this is where, in the end, your money comes from, where the interest rate comes from that you earn on your stablecoin. And yeah, when the borrower obviously returns the funds, then he will pay back the loan and close the position. And yeah, what's quite interesting is that you can take out your money at any time. So you are not tied to this one person that is using the loan. Because it is a pool, it's a protocol that is pooling different people's loans and positions, you will always be able to cash out on your position. That means in the case that even though you were planning to maybe just leave your money on there for a year, but something happens after 3 months and you suddenly need to take out your money, that is usually not a problem at all. You can always liquidate and take out your stablecoin. Yeah, but as I said, at the moment, for the other party in this equation, the person that is taking out the loan, because at the moment we don't really have good information about the borrower, they always have to put up a lot more money than they take out. And that's why currently cryptocurrency loans are only useful for people that are trading. And that might change in the future. So if in the future we find a way to ensure that people will pay back their loans and we can establish trust, even without them having to put up so much collateral, then there might be a way where we can actually have cryptocurrency loans that can enable people, for example, to start businesses in the future. And there's already companies working on that. So I hope it's going to happen sooner rather than later. And then one thing you won't get around in cryptocurrency these days is, and DeFi especially, is the so-called yield farming. It is one of the hottest trends in DeFi and everybody seems to be doing it. And what it basically is, it is just a fancy term for saying that you earn yield for providing liquidity to a protocol. So if you put your stablecoin as previously described in one of those lending protocols, this protocol might not only give you the interest rate, but they might also be giving you an additional token. And this is then the so-called yield. And one protocol which has done that and somehow really made this concept famous is Compound, because Compound gave out the comp token, and the comp token initially was priced at something around $10 and then appreciated to something above 400. And that's really how a lot of people made a lot of income, because they basically got this token for free and earned it on top of their interest. And now platforms are obviously competing to attract people to put their stable coins into their protocols. And that's why we see yield farming everywhere these days. And then there's even apps that help individuals to make the most of their yield. So they will basically move across the funds to find the opportunities that will earn you most. Yeah, and then one more thing that we will have to mention, even though I'm not the biggest fan I like to call them moonshot tokens. I'm not sure how much you follow the DeFi space, but recently we have seen a tremendous increase in new tokens being issued. And most of these are being issued on something called Binance Smart Chain. And a lot of these tokens, they are based on cute animals. Like, for example, this one is the logo of something called Shiba token, which is trying to be the next Dogecoin. And a lot of the time they're based on hype and trying to simply rally a community around something so that they invest. And as long as everybody buys, obviously the price goes up. But it's not necessarily the most useful use of capital. Even though some of these tokens claim that they will be giving money to charity, it is still just mostly a gamble, even though, of course, some of them have delivered high returns, but that comes with a lot of risk. And yeah, it's often not a productive use of capital because people will just put their money into those protocols that are nothing more than simply trying to increase their own price to make a lot of money. And unfortunately, we also have seen a lot of scams in that regard where people just play with others' hope. So I would definitely advise people to stay away from them. Or if you wanted to try just for the sake of education, then just put in $10 or $20, something that you can definitely afford to lose, and never something where it's really your life savings. So I think it's important to just be aware of that. Yeah, and also some of the challenges that still remain in the world of DeFi, and also if you wanted to start really getting into it and maybe you want to trade with it, then I think 4 big risks to be aware of, I would say, is first of all, smart contract risk. So how all these DeFi platforms work is with smart contracts. And smart contracts are basically just a code that automatically executes a transaction when certain criteria are met. And because smart contracts are still fairly new, so is blockchain technology, there's often the risk that there are still some bugs and some vulnerabilities in the code that can be exploited by hackers. And unfortunately, we see this quite frequently. Even so, yeah, if you are looking to invest or trade something on an exchange that is entirely new or a protocol that is pretty new, then I think it's always advisable to look if they had an hour audit, if a cybersecurity company looked at their code and checked if there is any obvious bugs or not. But even then, that is not 100% guarantee that it is safe. So I think it's people should always be aware that there is still some risk with this new technology, and be mindful. And then the second risk is market risk. If you really get deep into DeFi and you trade something that is not that much traded, and then you obviously have the risk that you might not be able to sell your token because there's simply no liquidity on the exchange you're trying to sell on. So that's also one risk, where even though the price might be good, you might not be able to turn that into returns for yourself because nobody is willing to buy from you. And then there's also, funny enough, centralization risk, because a lot of these protocols, they still rely on servers to run their chains. For example, might be running some of their computing power on AWS, which is obviously a centralized service. And then another risk is, that, for example, a lot of platforms also will be using oracles. So oracles are basically trying to bridge the gap between the real life information and smart contracts. Because smart contracts, obviously, they don't know what's happening in the outside world. So you will always have to feed in some data. And if you have a market where you need prices from the outside world, where you need the outcome of events from the outside world, a lot of these platforms will rely on an oracle, and those are also centralized services. So there's always a risk that if the data that is fed in is wrong, obviously it will lead to the wrong results as well in the protocol. And lastly, another challenge is also regulation. So far, DeFi has been fairly unregulated, which can bring obviously a lot of opportunities for traders and also for people to exploit. But with increasing regulation, there might be more difficulties getting into the space. So we will see what happens. But for you, I think in general, DeFi is still a really exciting place because it is a thriving industry. It is at the forefront of technology, and it gives people the opportunity to be part of creating like this better financial system. And also there are obviously many different projects that are targeting different angles and different problems. So I think that you can always find something that resonates with yourself and that you're passionate about. And yeah, talking about that, how do we get started? So yeah, if you wanted to get into crypto, if you wanted to get into DeFi, I've just listed out the first really basic steps is always, first of all, get a wallet app. So just like traditional currencies, you will need some things to store your cryptocurrency in. And you can find several wallet apps on the Play Store or the App Store. So that's usually the easiest step to do. I've just put on some fairly famous wallets. For one, that is Edge Wallet. Then there is Atomic Wallet, Exodus, and MetaMask. And MetaMask is one that is a desktop, a browser integration. So you can simply add that to your Chrome, for example. And once you have your wallet, the next step is obviously to buy some crypto. And yeah, you can obviously go to an exchange. So CoinMama, for example, is an exchange that is also operating, as far as I know, in most of the African countries. So you should be able to access that. And then usually they offer you various payment methods where you can buy with your card or you can buy with bank transfer and however you want. And another exciting platform is Paxful. So to buy crypto, obviously there's the way to simply pay with money, but Paxful is offering, I think, over 100 payment methods last time I checked. So they also accept, for example, you could buy a Amazon coupon and sell that on Paxful for cryptocurrencies. So Paxful is really trying to make it more accessible for people everywhere. Also people that might not be wanting to use a card or not be able to. And then there's also localbitcoins.com. And localbitcoins.com is yet a bit of a different model because they're not an exchange per se. They are a platform that matches individuals that want to buy and sell crypto. So basically what happens is that you will be matched with another person that is willing to sell you Bitcoin or whichever cryptocurrency you decide to buy, and for the payment method that you specify. So let's say you want to pay in, I don't know, euro, or maybe you want to pay in Amazon coupons, or maybe you want to pay in stamps. Then as long as there's another person that is willing to accept that payment method, you can get crypto this way. And then the third step is really to dive in. For example, one thing you can do just for the sake of giving it a go is transfer your crypto to another wallet. So if you have it in your own wallet, you can download another wallet and transfer to that, and you can follow the transaction on the chain because everything in crypto is stored on the blockchain. So you will always have a transaction hash, and then you can check how far the transaction has progressed, which can be quite fun. And then, yeah, you can obviously also start trading. You can deposit your money on an exchange or a DEX and start swapping for other currencies. You could also put your money into a lending protocol and start earning some interest. So the possibilities are really limitless in the world of DeFi. And there are a lot of different interesting applications and services and platforms where you could put your money into and just start. I would always advise to start with small amounts. because when you get started, this is really more of a journey before you invest anything big. Just try it out with small amounts first. And once you have confidence and know what you're doing, then you can always scale it up. So yeah, really important. You will often hear that do your own research and have a plan. So that is trading in general, but in decentralized finance, even more, always do your own research on projects you're looking to buy. Check if they have an active community, if they have maybe known backings like venture capital, if their contract has been audited, if there is maybe on Reddit any negative experiences, good experiences, all these things. Look into it and don't just trust somebody who tells you, hey, buy this, it's going to make you 100% return. That's usually not the best strategy to trade. And then it's also important to have a plan, because I think a lot of people, it is a bit of a beginner mistake, is that you just think you're going to automatically know when you're going to take profits or take losses. So what is going to happen is obviously not every trade will turn out well. So you should make a plan before you buy something. When are you going to stop the loss? Are you willing to take a 10% loss? Are you willing to take 50%? That is something you should make out before you start trading. And then it is really difficult to do, but follow that plan. And yeah, you will at least not have too many negative surprises. And well, if you actually wanted to work in DeFi, I think you can always do that. I think one step to take is always to start using DeFi products. First, of course, to see how the experience is actually, because you might notice that sometimes it's really user unfriendly. And then you might notice that you would like to get into a company that is trying to solve that. So it's really to try all these products and see what you really like, where you want to get involved, or what you can identify with. I think another really powerful thing is to network. This is how I got most of my jobs in crypto, is really to go to all these conferences, attend networking events, connect with people on LinkedIn. I know at the moment it's a bit awkward to go to all these digital events and then have the networking where you just meet the other people on camera. But I think everybody's feeling a bit awkward in the beginning, so at least we're all in one boat. And it can be really powerful for career progression and also for your own learning, because you will meet people that know a lot more than yourself. And I personally find that very inspiring. And you can usually also, learn a lot. So yeah, I think studying and continuing to learn about DeFi, it is nearly impossible to keep up with all the new things happening in the space. But allocating some time to doing that, and you're all doing that today because you're here and listening. And then I think the best thing that I've done is always ask people when I didn't understand something, because there's so many technical concepts. And yeah, it helps to ask them to explain something, even if they explain it 3 times. If you find somebody patient enough to do that, just ask them to explain. And then usually you will find out if you understand something. Also figure out what your skill set can bring to the space. I think a lot of people are intimidated because it does seem very technical and maybe nerdy and not so accessible and kind of hard to get into. But I studied linguistics. I do not have a finance background nor a technical background whatsoever. And it is not true that we only need developers, because I think if it is only super technically oriented people, we will have a problem selling the DeFi product to the rest of the world, because those people might not even want to understand. They just want to have an easy to use app. And that's really where people come in that have more of a creative background, that have an idea of design, of customer experience, also customer support. So crypto really covers, and DeFi really cover the whole lot of different skills needed. And that's why I think you shouldn't hesitate, even if you don't have a tech background, because I know a lot of people that don't, and they're doing just fine in crypto and DeFi. So it shouldn't be stopping you. And yeah, if you're really getting serious about it, you can always check DeFi and crypto job boards. There are several out there. There's, for example, crypto.jobs, crypto jobs list, and many more. If you simply put it into Google, you will find a lot. And I think one of the very positive aspects of the whole DeFi crypto space is that most companies are very open to remote work. So the only constraint they sometimes have is the time zone. But we, for example, at our exchange, we do employ people from Nigeria as well. We have people in Asia. We have people in the US. So it's really spread across the globe. And I think a lot of DeFi companies are very open to that. So you could even get started working for a company that isn't anywhere near your country. As long as you manage to coordinate the schedules, there's usually no problem whatsoever. And then, of course, if there is any DeFi projects in your community that you want to get involved in, usually they're also super happy if somebody just starts helping them manage their community. And that could be on a voluntary basis first, but you never know how that evolves. And yeah, that already wraps up all the things I wanted to share today. And just thank you for attending today. And if you do have any questions, I have put in a few places where you can find me. You can shoot me an email, for example, even though I'm not so big on email. So you might be better off chatting me up on LinkedIn. And yeah, I think we can move on to the questions part. So yeah, if you have any questions.
Awesome. So I know we have our first question here. What can you tell us about transaction costs when transferring to other wallets?
Mm-hmm. Yeah, so that really depends on what you're transferring, actually, because the transaction cost doesn't necessarily depend on which wallet you're using. It depends on which blockchain you're using. And I think the biggest one that people know, obviously, is Bitcoin and Ethereum at the moment. Bitcoin transaction fees can be quite high if it is just smaller transfers. And the same goes for Ethereum. The other day I transferred something. Okay, yeah, a friend of mine transferred me $17 and he's paid $17 for the transaction. So that was a pretty useless transaction. But if you use another currency, for example, like Bitcoin Cash, then the transaction costs are really low. It can be like 1 cent for a transaction that is as big as $100. So that is really depending on the blockchain that it is run on, and not so much on the wallets, because the wallets, they don't make money usually when you transfer.
Great, thank you. Do we have any other questions? Okay. Thank you so much, Naomi.
No problem.
All right.
Are you going to throw me out?
Yeah, I'm still getting I'm not as smooth with the technology as I claim to be. So up next will be, so thank you, Naomi.
No problem.
Up next, we have Ravi Srinivasan, who is going to be from Blockchain, who's going to be talking about shedding some light on digital currency and its contributions to financial inclusion. So welcome, Ravi.
Hello, Rachel. Can you hear me okay?
Yep.
Great. So I'm going to share a few slides as well, and
Go for it.
I really enjoyed listening to Naomi, and that was a wonderful introduction. So I'm sure there's a lot for us to learn.
Awesome.
So let me first get something shared here.
All right.
Okay. Are you able to see my screen? Hi, are you able to see my screen?
We can see your screen.
Okay, perfect. So what I thought I would do, building on the wonderful introduction and the wonderful topics that Naomi shared, was actually talk about a few different initiatives. And there's, I think, a whole spectrum of initiatives around taking the impact of DeFi and digital currencies, which are obviously transforming certainly the financial world and how settlements and how transactions are conducted, and how that can impact our communities at large, how there can be a social impact across several of the different kind of UN Millennium Development Goals, and how, and a couple of particular examples of where this is going. And so I wanted to focus a little bit on a few concepts in particular. One is this idea of universal basic income, which I'm sure a lot of you know about already. Some of the trends around central bank digital currencies, which just builds on the ideas that Naomi mentioned, but really sponsored by central banks and some of the goals they're trying to achieve potentially. And then relative to some of the work I have been doing with blockchain for social impact, some new ventures that we're seeing. So I'm based in the New York area. I've had this opportunity to contribute and work with Afro Valley for the past several months. And among my roles, I'm an advisor for Blockchain for Social Impact Coalition, which is a nonprofit based in the US, but with global impact that focuses on really taking a lot of the capabilities, technologies, and power that comes through some of the blockchain technologies and applying it to different social impact goals, ranging from financial inclusion to sustainability, to plastics and pollution, to the environment, to education, etc. So I've had the opportunity to be part of that board. We've had several incubators and hackathons over the past few years. Obviously, last year's was entirely remote. We had teams from all over the world that built different solutions, really focused a lot on sustainability. And this year, we're looking forward to having one focused on NFTs and DeFi, actually, the social impact opportunities through the use of DeFi and NFTs. It'll be coming up in June. You will probably hear more about it through this East Africa blockchain event as we start to use that to publicize it as well. And I would encourage those who are interested to find out more, and feel free to get in touch with me. Otherwise, I'm also a consultant in digital transformation and in technology as a whole. So I've had a technical background. I've built companies in different spaces in outsourcing, in cloud, in data center, and then obviously now advising firms in those spaces as well as in blockchain, and then also really focused a lot on the idea of governance. So I do a lot of work with the governance group, focus on CSR, responsibilities for private companies. So with that in mind, I wanted to first share some thoughts on this idea of universal basic income. So outside of the world of digital currencies and blockchain, obviously, I'm sure most of you know of this concept where we're trying to see if we can build kind of a baseline for citizens all over the world, and certainly within different countries. And I think Europe has really been leading on this in how we can ensure that all citizens have a minimum standard of living in order to be able to actively participate in society, in order to ensure kind of a stable and healthy society as a whole. So what we're seeing, though, is notwithstanding that exploration that and those experiments that different governments have been executing, is there is an effort in this world of crypto as well to see, can we encourage collaboration across borders around universal basic income and how it's implemented. So one interesting forum that has evolved over the last few years is OpenUBI, which some of you may have heard of, which is really the idea of building platforms for universal basic income that are not dependent on politics or changing government, or global by nature, and arguably are voluntary in terms of how supporters can fund those models and how obviously recipients can partake and leverage those models. So I wanted to explore that a little bit further with one particular organization, Good Dollar, that actually participated in one of Blockchain for Social Impact's events a few years ago, and so we're very excited and watching them evolve. It's still very much early days, but I think it showcases something interesting here. So the idea in creating platforms for uniting all these basic income initiatives and is how can we leverage decentralized cryptocurrencies for this, and how can we leverage blockchain technologies as a whole. So there's some principles that we're taking into account. So again, similar to some of the concepts that Naomi shared earlier, obviously it's accessible literally to anyone who can access it. In most cases, there is obviously internet and technology access we need. It has to obviously be exchangeable into local currencies. There are transaction fees, which there was a question on earlier, building a platform that's efficient, and then obviously the transaction fees are obviously low enough where it makes sense for folks to be able to exchange and be able to transact and be able to trade value essentially through that for their day-to-day needs. And obviously the use of these independent, smart, automatic contracts for the people who are staking into these platforms, and then obviously people who are receiving. And then in the case of the open UBI concept, it's also essentially independent. The goal here is to be independent from the national governments for given territories where people live and work and need to sustain themselves. Now, what that means in terms of what all these endeavors are trying to achieve. So the idea of people-powered governance. So that's one of the key elements of the blockchain. How is it governed and managed? So individuals and organizations can participate, collaborate, build what amounts to that decentralized governing body that manages monetary tools, and we have token ownership, and then you can then, through your stake, participate in that particular platform. And then value creation and distribution. So the smart contracts are created in a transparent manner, and they power the unified system, and then allowing people to efficiently, transparently generate and receive basic income. And we'll get into how kind of the interest works and how people get involved with that. And then obviously through leveraging DeFi, there is the ability to operate faster than what governments can do on their own. Again, we'll talk a little bit later about what governments are trying to do, but this is an interesting environment where obviously the private sector and individual developers, firms, and a lot of the folks in forums like this were creating capabilities, in some cases more rapidly than what governments are. And so there's that back and forth when we talk about social impact and the need to collaborate with governments in some ways as well. And obviously this varies by jurisdiction. You have places in the world where a majority of cryptocurrencies there's an effort to eliminate them. Places like India, where they're, for the most part, trying to ban them. And then there are places which are adopting them, certainly some state governments within the US and elsewhere, which are trying to create an environment where they're adopted more rapidly. There are attempts in places like Miami to even pay employees, municipal employees, in crypto. So it's really all over the place, and I think that may continue to be the case for the next few years as the public sector tries to understand, well, how do I leverage this, and how do I keep up with the innovation that's already happening in the private sector. So Good Dollar is an interesting organization that's been around for a few years now, where supporters who stake into the Good Dollar token, they receive returns, interest, market rate returns for locking their capital or staking into that Good Dollar cause. And then any person, you or I, can claim a daily sum in the form of Good Dollar coins. And this is still early stage. Obviously, the ability to exchange into a fiat currency where one can actually redeem something of value, food, what you need for clothing, shelter, etc. Those are still in the process of being. Those vary from place to place. Now, how does this work? Supporters stake other cryptocurrencies through the wallets that Naomi shared earlier, and other wallets that obviously exist, and different cryptocurrencies that people are buying and exchanging and trading, etc. In these decentralized third-party protocols. Now, interest is generated by staking these cryptocurrencies, and that's Naomi also referenced some of the lending platforms that are out there, and really a lot of the focus around DeFi is can we build more efficient lending platforms that disintermediate the banks and financial institutions that really control the majority of the world's lending today. But in this particular case, we have interest generated by staking these cryptocurrencies. Then we mine good dollar with this interest. Supporters are paid a portion of this interest, and the remainder is distributed as basic income to those who wish to claim and wish to be recipients of this. So the system is fully collateralized, and supporters receive reward payments, convertible back into other cryptocurrencies, etc. So when we get into the details of this, there's a lot of other particular elements that I think matter a lot more to the folks who are involved. So, and that goes into, I'm not going to get into the complexity of how this works, but the point is just to show the type of different platforms that have been built to really address, in this case, the universal basic income idea, using a lot of the technologies that exist today in the world of crypto, and watching that evolve over time, I think becomes very, very interesting. So there are a few more examples of this, which I'm happy to share and get into. So good dollar is certainly not the only one, but again, there's a whole flow here between the supporters who are staking a certain amount of crypto and then using that third-party protocol, for what you see here. There are the buyers who are actually then tapping into that good reserve. There's the decentralized autonomous DAO, a DAO, that then receives that good dollar. And then obviously there's the UBI scheme, which then goes back to the claimers, who are then claiming universal basic income through the scheme. So there's, again, a detailed relationship. I'm not going to get into it at that level of detail here, but certainly happy to get into that if it makes sense during questions or offline for those who are interested in learning more about how this has been set up and how different organizations have chosen to set up their particular token and their platform as far as the relationships between buyers and claimers, and what third-party protocols they're using to issue a staking token, etc. So another area which I think is interesting to continue to look at, and it's gotten a lot more attention certainly in the past 12 to 18 months, is now outside of what firms like Good Dollar might be doing, is what are different governments doing today? What are central banks doing all over the world? And it varies significantly. Some significant portion really aren't doing anything or are just observing. And then several are actively involved in running experiments, and we're starting to see firms like Consensus even creating sandbox environments for central banks to actually experiment with this idea of digital currencies. So a lot of governments all over the world obviously have fully embraced digital payments, and that's been around for several years. Obviously, it's been spearheaded in many cases by what the M-Pesa platform in Kenya, but now in several jurisdictions all over the world, with the prevalence of mobile phones, we have people who are able to make payments through their mobile phones or their computers with internet access. Obviously, in the vast majority of those cases, those are all going still through private sector banks and leveraging the capabilities of the central bank. So those are not digital currencies. You're just making a payment. You're using whatever bank you normally bank with, and then you're executing a payment through to a third party. And there's a certain level of transaction cost to that, a certain level of efficiency to that in terms of how quickly they settle as the banks have to reconcile, etc. So then you have obviously this evolution to digital currencies, not necessarily what Naomi was discussing in terms of Tether and some of the stable coins that are out there, but currencies that are actually backed by central banks. And there are very few of those still out there. Sweden has experimented with some. There's a digital yuan that China is considering, etc. But the idea of digital currency is obviously that it is decentralized. There is a potential for payments without an intermediary. And there's obviously the ability to work across numerous jurisdictions. So again, in that case, similar to some of the stable coins that are out there already today in that different exchanges, et cetera, are using. So there are several limitations to digital currencies that are being created by central banks in terms of what their goals are, because their goals in some cases could be very different. It still needs to, in some cases, be able to support offline interfaces and offline transactions. Clearly, because while everyone may still have a mobile phone, we're still now dependent on the network, unlike the days of cash that we all have still access to today. Payers must be able to pay any amount up to the balance noted in their wallet. So there's that whole topic of how to ensure that double spend is accurately tracked for and eliminated. Payees must be able to independently verify the authenticity of that received payment. They must own the funds transferred instantly and with certainty. And to the extent we need to go offline, that ability to transit between online and offline needs to be seamless. And obviously the total amount in terms of between a payer and a payee is conserved, so we're not, the management of the creation of new capital or new currency, if you will, is really the purview of the central bank. There's still security concerns. Obviously, there's counterfeiting risks just as much as there would be in the physical world, as we can see through hacks and through just what malicious actors can potentially do. And then fund recovery. So if you lose your device, if you lose the key, your private key, through which you're able to access your digital wallet, how do you recover your funds? And obviously, a lot of the private wallets today have means for that, but it's still something that when you expand this to a broader population becomes a very significant component. And then just technology and access disruptions as we continue to see occurring all over the world in terms of disruption to any activity where there is that technology component. And obviously all of you have probably seen the disruption to a pipeline, a physical oil and gas pipeline here in the US, which is now impeding energy supplies across the US East Coast. So that can happen to any space, any sector, and so the management of that, I think, becomes very, very important. But what I think is very, very exciting here is the key advantages that we have for really the central bank and a government using that as a platform and using their megaphone, if you will, to increase inclusion of other sections and broader sections of society through the reduction of transaction costs. So you can control that to some degree. The efficient account opening through using digital identity capabilities that are already there on the blockchain. The challenge for the unbanked population, which continues to exist all over the world, certainly exists still in the US significantly, exists all over Africa and Asia, and certainly even in parts of Europe where folks cannot access a bank account for whatever reason. They don't have access to that because they're in a marginalized section of society. How can we really change that by giving them direct access, if you will, to the central bank through opening a wallet, through digital identity capabilities that may already exist, and then allowing them, and then doing the KYC through that, and then allowing them access to then be able to participate in society. They can borrow money more efficiently if they needed to. And obviously they can lend if they are in a position to do so, and then they can transact. They can get paid for work that they do. All those elements. And then obviously the decentralized trust approach. So right now, most of us still put our trust in financial institutions wherever we live. And that obviously is evolving for those of us who are certainly in a forum like this and in the crypto space, but really that decentralized trust approach where governance is managed through the entire platform and not necessarily through a centralized intermediary like a bank, I think provides another advantage for increasing inclusion and increasing participation in transactions and in the use of these currencies. So this will continue to be something interesting to study. There are countries like India is also attempting to introduce this digital rupee, which I think will be interesting to see to complement some of the payment platforms they already have, and to try and have these goals of by 2025 of bringing 70–80% of their transactions to the digital space. And so it'll be interesting to see how all that evolves. It'll be interesting to see how the banks also react when you look at different stakeholder lobbying groups. Banks, obviously, this will transform the way they do business, and in some cases could eliminate some of the activities that they do. So that will also continue to be interesting as firms explore this, and then now we kind of have these sandbox environments where people can experiment in real time and see how this works. I wanted to share, just as an example, what some interesting startups are trying to do, and this is really based on some of the projects that we had a chance to nurture and incubate through the 2020 incubator that Blockchain for Social Impact worked in. So we had an interesting social impact incubator that focused on topics ranging from sustainability to plastics and pollution to elements of financial inclusion last year. It was entirely remote, as I'm sure you can imagine. It was very exciting. We had teams from all over the world. I will separately share the link to the conference proceedings. It's on YouTube, and it's also there in the, if you go to the Twitter feed of Blockchain for Social Impact. So I will share that with everyone here after. But you'll get to see some very interesting presentations from some of the most interesting startup teams that formed during that forum. And one interesting areas where people were focusing on was this idea of community currencies. So multiply.charity is one, and then there's another one, grassroots economics. And so the idea was then to more efficiently get funds to people in an efficient way by donating directly to people and trying to eliminate the intermediary again. So multiply.charity focused on building a custom wallet to stimulate the residential development housing by donating money directly to people. It was a web wallet created in Kenya. There's a community now of over 24,000 people in that community currency economy. And then people are able to interact with the system again using their mobiles. So in that case, something that people are used to given they have access to M-Pesa already. And very most interestingly, it's an SMS-based solution for transfer. So going back to the point that even Naomi made earlier about how in the world of DeFi, we have a lot of sophisticated technology and a lot of extremely knowledgeable and capable developers and technical skill sets, and people are contributing to that. But in many cases, or at least in some cases, the user interface and the ability to interact for those of us who are trying to expand the reach and capability is limited. So that the UI is a problem. The ease of use could sometimes be a problem. And so a lot of attempts are being made to improve that. And in this case, obviously leveraging SMS, something that people have been using now for 20 years. And so today's generation of people who have phones really find that interesting to do. So that the ability to send and receive these funds through SMS in a simple way, while at the same time, obviously leveraging all the security components I talked about earlier, becomes interesting. So that I think will be something interesting to continue to watch, and I'm happy to share more details on that. Another organization that was incubated during our 2020 incubator is Comunitas. So this the principle here was to create an organization and a DAO for affordable and community housing again, and then creating an environment where we can provide a more structured governance platform for decision making, a platform for community finances, so people could then use those community finances and then contribute to real life needs that they have. It could be plumbing, it could be repairs, it could be roofing, it could be creating additional facilities for folks in that community housing area to be able to interact with each other. And then there was actually a focus on how do we ensure that those community funds are managed efficiently. We're all aware that there's that risk of corruption, there's that risk of mismanagement. And those risks won't go away, but to the extent we can leverage some of the capabilities that blockchain brings around tokenization, around transparency, around the ability for all the stakeholders then to be able to participate in the governance, we can do our best to reduce the impact and more quickly arrest that mismanagement or potentially even corruption of these community funds that are then used to more efficiently manage and improve community housing and affordable housing that citizens all over the world need as they look to be included and better participate in society. So I know I shared several different ideas here. Is really more to stimulate the conversation around what's happening, some of the things that are happening in the space. I did want to share my contact information here as well, my email and Twitter, where I'm happy to interact with everyone. And obviously some of the information for Blockchain for Social Impact Coalition, including our Twitter feed and the website where you'll start to hear more about in the 2021 incubator as well as conference. So I'm happy to continue the conversation. I'm happy to have some questions asked and try to answer them as best I could. Thank you.
Thank you so much, Ravi. Do we have any other questions during this time? Can wait a few moments. Let everything sink in. If not, I'm sure they'll probably have some questions following the event. So there will be a few more events this month, and I encourage you and everyone watching to keep up with what Afro Valley is doing, either online at afrovalley.io or you can find us on Facebook. All right, so I don't think there are any more questions. Thank you so much, Ravi.
Thank you. Bye.
Bye. Thank you, everyone, for joining us today. Have a safe week, and we'll see you at our next event.